Welcome to the daily stock review of Compugen. The goal of this channel is to uncover the world's best stocks that have 100x potential by reviewing 1,000 stocks in 12 months. If that sounds good, subscribe to come along. Who am I? I'm Jack. I'm an individual investor on the journey. I'm just 2,500 hours in over the last 7 years, and I'm sharing the lessons along the way. This is my investing process. Today I'll cover how I came across this stock and the 5-minute check to see if it's worth looking into further. These are the guys I learned off. They did pretty well for themselves over just a little while. And by following the breadcrumbs they've left behind, should be able to follow in their footsteps. If you like the free investing resources that I wish I had when I first started, investing checklists, calculators, other resources, you can check those out. Link in the description. It's free. My gift to you guys. Let's get into it. So Compugen is an Israel-based company that is also traded on the NASDAQ. So I came across this business doing a screen for small stocks, anything less than 2 billion, and that had high revenue growth over the last 3-year period. And then I've looked for the best of the best out of that as well, because that screen was over 1,000 stocks, and really we're looking for anything that's got some good profit margins coming through the business. So let's have a sticky beat. Now, to perform my check, I really just want to find the annual report. So I've gone through that and found the latest, which is 2025's annual. Then comes out in this pretty ordinary format. Because it is a US, I guess, is their second home. If they want to have a listing on that, then they need to do this Form 20F, which is pretty much just redoing their annual report in the US's 10K kind of format. And yeah, just kind of noting that, yes, it is a foreign business on a foreign exchange that has a US exchange version as well. All right. So I got the pretty version of that in HTML. Couldn't see a way to put it into a nice, pretty PDF without doing print screen. So let's use this. So I want to look at the income statement first, which is also known as the statement of comprehensive profit or loss. And we can see our revenue for the last 3 years, 23 to 24 to 25. It's gone from 33 million, 27 million, and then 72. Nice. So on a deep dive, we definitely want to see how. We want to understand how that's happened and what is the growth rate we are going to expect moving forward. Because we've gone from 33 to 27 up to 72, so something's happened. Now, what's the gross profit? Oh, nice. Gross profit is the majority of that. That is huge. So that's a pretty good position to be in. Business is making a lot of gross profit. What about our research and development expenses? Gone. So in these previous years, research and development, general and admin, even just R&D, just pretty much wipes that out completely. That leaves our total operating expenses, we're operating at a loss except for the most recent year. And then profit, net profit at the end of the day, we've had minus 18 million, minus 14, and then 35 mil for the most recent year. So pretty good. Like, turnaround here. It really comes down to how. How have they come across that extra money? So let's have a look in the balance sheet just for any issues here. We just really want to screen for anything that's going to be a big issue for them. We've got assets, total current of 148 mil. Total assets overall is 156. So the majority of that is cash. You can see that cash position's grown a heap since last year, so that's interesting. We'll just take note of that now. And when we have a look at the total liabilities against 31, So they have a lot less liabilities compared to their assets, which is good. Deferred revenues, accrued lease liability. Okay, so they're not loaded up with debt at all, which is great. So no real red flags here. We can see the accumulated deficit. So this business hasn't turned a profit when looking at the overall duration that the business has been around for. Like, it's almost got up to $500 million. Yeah, $500 million. It's spent to try and get to the stage where it turns profitable. And we can see that I guess 35 mil that it made in net has come down and wiped out a little bit of that accumulated deficit. Now, this isn't to say that the business has, it's got to pay this back. This is just more of a yardstick to say how much in the red or the black is the business over its lifetime as a company. And with the only year being in the most recent that it's been able to turn that profit for what we can see here, that is, over the last 3 years. All right, let's have a look. So these are really strong gross margins. So they're huge numbers. And what that means is the business, it's got 7 here. And for every $7 that it gets, how much does it actually cost them to provide that product or service? About $1. They get to keep $6 for every 7. So that's huge. Now, when it goes down through the business, obviously, because revenues have been so low in previous years, that's been completely wiped out and more. But in the most recent year, they've been able to maintain that research and development spend. If anything, it's decreased a little bit over time, only by these 3 years. General and admin has remained about the same. So they're holding appears like a tight rein on costs. And they've been able to convert this extra revenue into cash or net income at the end of the day. So let's go and have a look at the cash flow statement, because that's all good. It indicates the business has got a strong mastery of its customer with those gross margins. And then in the most recent year, it's kind of shown that it's got a bit of a moat around it as well with those margins as well. But it's got it needs to continue to increase that revenue and bring those profits home to its owners, because at the end of the day, if this business makes a loss for the next 100 years, I don't think it's been a good investment for anyone. All right. So looking at the cash flow statement, so what I'm looking for is, I want to see if the business is actually making money at the end of the day. And I'm looking out for any random kind of points in here. So I see this is a noticeable one. We've got increase and decrease in trade and receivables. So there's a big bounce from one year to the other. And so it was a big minus here. And that's led all the way to the bottom and meant that they haven't had positive free cash flow. And then it's bumped it up here. So really, what would happen if we just wiped that off for both years? We would end up with, a little bit of profit here and a little bit there. If we split it, so it's minus 30 here and plus 30 here, we'd end up with a 0 and around a 20. So where the real world is, it's kind of hard because these adjustments happen as a snapshot in time. And then we've also got this deferred participation in R&D expenses. So that then got added on as well, which kind of wiped out part of that. In the most recent year, what's going on? There is no big or small changes. So it means it's a little bit clearer to see that the cash flow has made its way to the bottom of this operating section. What that means is this business made $31 million in cash from its core part of the business. Part of the business where we would expect it to be making money. Now, we've got investing activities. So where did the business want to invest or spend it? So we've got proceeds from maturities, investment in short-term bank deposits, and proceeds from marketable securities, investment in marketable securities. So this stuff here, plus 76 mil, minus 60, plus 50, minus 35. This is all just, their working capital. And so this is kind of like their bucket of money that they play around with just to maintain their cash flow through the year to pay off whatever they need to. And that was already seen on their assets as well. And so we can see that 31 mil, 29 or 30 million of it has pretty much been put into this. They've bought extra short-term bank deposits. They've purchased extra marketable securities just to increase their current cash position for this year. So we should be able to see that go through the rest of the business. What else has happened? We've got proceeds from issuance of ordinary shares. So they issued, 10 million, 10.5 million worth of shares. We've got to keep that, bring it through the business. And their net cash position has increased as well. So why they did that, I don't know. I'd have to go through and read, but it seems a bit odd. I start to wonder, why do they need that? Why did they need that 10.5 million? All it does is dilute current shareholders. There needs to be a good reason for it. Otherwise, it's just frivolous spending. Or, frivolous asking for money from places that don't provide long-term value. And so maybe there is good reason. I'll have to read through and do as part of the deep dive. All right. So end up with cash on hand increasing a fair whack. And they've been able to hold that most of that cash up top. All right. So is this business worth looking into and doing a deep dive? Yes. Yes, it is. With those profit margins, they're really attractive. And the moat that it has around that part of the business looks pretty interesting as well. And having a look where the business has spent that money, it's obviously grown its cash position for a reason, whether that be for a acquisition, whether it be for more organic growth. They're going to do some form of investments in something, or they might be, trying to look around for some certain, people capital to be able to invest in. I'm not sure, but by reading through the rest of the annual report and doing that deep dive, we should be able to see what's going on within the business. And what would I be looking out for? I'd really want to see and try and have a better understanding for where that increased revenue came from and what that trajectory kind of looks like. Because this stock at the moment is still trading at a price to earnings ratio significantly less than what would be classified as, priced at appropriately. And especially for the growth. So what does that mean? It just means that current shareholders don't believe the growth prospects for the business will continue, and they're probably rating it that 72 million that they got next year, it will be less, especially if that's what it's being rated at the moment. Because if we look at their net, they got a market cap of 221 versus making 35 million net profit, which was pretty much the same as their free cash flow. That would be a very attractive investment opportunity if that was the only story. But we do our deep dive, we do our homework on the stock, to come up with an adequate valuation of it. And then in doing so, we understand the business side, and then it's up to us to understand what is going on with the investor sentiment side of it, the psychology around why have majority of investors only priced it here, because most of the time the price is already, all this information is already baked into the price. So that's the game to play. If you guys enjoy this one, let me know in the comments. If you guys have got a investment in Compugen, let us know. Let us know your thesis. Have you been in for a long time? Are you long? And yeah, help some other investors as well along the way. Help understand the business a little bit as well. Thanks for that, guys. Appreciate it. Otherwise, check out this next video because YouTube thinks you'll like it. Cheers.